Hello, everyone, and welcome to today's Insightful Accountant webinar. Insightful Accountant is an online news and information source written for small business advisors interested in the latest news and offerings in accounting technology. Today we have Matthew Fulton, the co-founder and CTO of Parkway Business Solutions, Lynda Artesani, the president of Artesani Bookkeeping, and Pam Victor, the director of West Coast Operations at AP Intego, presenting Surviving Your Next Workers' Comp Audit. My name is Emily Hedrick, and I will be your Insightful Accountant webinar host. If you have any questions during the webinar, please enter them in the Q&A box, and we'll try to address them during the webinar. If they're not addressed, they'll be compiled and given to the presenters for follow-up. The webinar will be recorded, and everyone that has registered will receive a follow-up with the webinar and the recording and handout after the webinar. Thank you all for being here with us today, and you can get started when you're ready.
Awesome. Thank you very much. To get started today, we'll do introductions in a quick moment, but our agenda for today is basically, we're going to talk about the whole workers' comp audit process, what it means to get prepared for this. And then we've actually gone through, and I always found when I was first starting to do these different audits, it was the fear of the unknown that actually made me the most concerned. So we went through and we basically did screenshots, and as we went through an entire submission process of 2 different audits. And we wanted to be able to share the type of information, the type of questions they're going to be asking, so you can feel prepared to take care of that next audit. And then, of course, we're going to show how you can track this stuff more appropriately using a pay-as-you-go service within QuickBooks Online by AP Intego. So when it comes time for that audit, it's easier to grab the reporting. Myself, I'm Matthew Fulton. I'm with Parkway Business Solutions. Parkway is an accounting firm that handles basically accounting and payroll for small to medium-sized businesses. We also created an application called Vendor Sync, which is focused around QuickBooks Desktop and helping to bring the data entry from the bank feed in a little bit more efficiently. I'm also the co-creator with my cohort Lynda here of the Facebook group QB Community Live, where it's a group made of basically small business owners, accountants, bookkeepers, and tax professionals focused on the idea of together we all succeed. Now, Lynda, my cohort, would you care to introduce yourself, please?
Sure. My name is Lynda Artesani. I'm the president of Artesani Bookkeeping, and I primarily work with attorneys. A lot of jobs that we're doing now have been migrating attorneys off of bigger, other law-specific platforms and into QuickBooks Online and Lien Law. And like Matthew said, I also am the co-creator of QB Community Live, which is a great group of people where we just help one another, which is the best part of it. And it's what we've always dreamed about it being. And it's actually a living thing now. It's wonderful. And I live in Estero, Florida, a little north of Naples, and I'm also a yoga teacher.
Awesome. And Pam, please introduce yourself.
Hey everybody, I'm Pam Victor. Thanks so much for having me here today to talk about a topic that's so near and dear to my heart, workers' comp audits. I manage our workers' comp audit division here at AP Intego. AP Intego most of our business is pay-as-you-go workers' comp. And although pay-as-you-go workers' comp reduces the chance of having any type of audit adjustment, the audit still does take place. And having pay-as-you-go makes it a little bit less painful and spot on. But I'm happy to talk about all about the different topics involved with workers' comp audits.
Thank you so much for being here. We thought this would be a very unique way to present this topic. We've done quite a few different webinars now around workers' compensation, but the audit, everything we've talked about through all this whole series, it all comes down to that audit. So having the internal insight will be phenomenal. Really appreciate that. So now it's time for the legal aspect of it. So neither Intuit nor this content is intended to provide legal, tax, or financial advice. The content and materials are intended only to assist you in your general organization decision makings for your business or practice. Accordingly, before making any financial decisions or implementing any accounting, financial, business, or other strategy, you should consider obtaining additional information and advice from professional accounting, legal, or other advisors who are fully aware of your circumstances. Intuit disclaims all warranties to the accuracy, completeness, or adequacy of such information. Do your own homework is what it's saying, to be safe.
I have to say, Pam's the only person I know that actually loves audits. She said near and dear to my heart. And
That's
I'm
true.
like, words you never hear with the word.
They're really not that bad.
Okay.
So we've got a couple poll questions, of course, today. We're going to launch the first one here. Pretty easy one. Do you do the audits for clients? Yes or no? We do, personally. How about you, Lynda?
We do. We absolutely do. It's part of our service.
Pam, I'd ask you, but you do every audit, right?
We don't love them.
Yes.
As we get close to full participation, we'll get the answer for everybody as well also. In the past, when we've done these, we've shared some of the horror stories we've had around workers' comp. And I tell you what, doing my first workers' comp audit before being in the accounting industry, just running business, I will never forget that. So they don't teach you that in school.
No.
All right. So we've actually got a very good mix, a good blend. So it's, it's pretty interesting. I'm glad to see that kind of a blend. Hopefully more people will feel more comfortable after this, of course, to do that. So now, Lynda, are you keeping an eye kind of towards the chat to make sure if we've got other questions also? Thank you so much. So getting prepared, it's all about having all of the right documentation. And there are certain supporting documents that are really going to be necessary basically for any insurance provider to complete your audit. And Pam, if you see anything that we're missing on this, please feel free to jump in on it as well, of course.
Okay.
The most important ones, of course, right off the bat are going to be your quarterlies. You're going to need all of your 4 quarterlies, your 941s, as well as your state quarterlies. So my example being California is a DE9, but that terminology changes based on each state, of course. Additional information that you're going to need is, of course, your payroll summary reporting, usually a list of all of the different paychecks that are through the entire period of time. They generally always want to see a profit and loss as well. And part of that is they're using it to verify the wages there, as well as if money was spent towards subcontractors, which is the last item and probably one of the most overlooked, but most important are your certificates of insurance.
So one thing to add to this is in California, for contractors, wages are split into different class codes based on the hourly wage. And so one way to support that is to have time cards available if you're a contractor in California.
For subcontractors also?
Subcontractors as well. Any contracting classes like painters, plumbers, electricians.
This is only a California thing?
Only in California. Love California.
Are you going to give the materials, Matthew, out as well? Because that was
yes. So all of these slides will be provided in that follow-up email, and all of the links inside of the PDF for contact information, everything else, you can click the link, it'll take you straight to it as well. So good question. So actually you just kind of touched base on this, Pam. The next part of it is, so I always found this to be frustrating at first as I was just learning it, is what wages are included and which ones are not, right? And some of the information, like, it changes from state to state to state to state, unfortunately. It can't be just nice and consistent as we would like. But the common stuff that you'd expect, right? Of course, your wages, your salaries, commissions, piecework, is, people kind of forget about that one, profit sharing, pension plans, all of that's included, as well as any bonuses are included. Holiday, vacation, and sick pay. Now, I want to stress with sick pay, one of the ones you'll see on the other side that's not is in the COVID times, FFCRA, Family First Coronavirus Response Act, where you actually have employers will pay employees because they've been impacted by COVID. That is not included in the wages. That's independent of it. Allowances paid to employees, rental value of apartment or house, that'd be nice. And any certificates, merchandise, and credit receipt in lieu of wages. So they're trying to take a look at all of that cash compensation. And that all becomes part of the wages earned that you would then multiply by the remuneration rate, which is your percentage per $100. Anything I missed on that one? That's not too crazy independent. So as you can see at the bottom, like Oregon, these are just a couple examples of how it varies, right? So in Oregon, vacation and unanticipated bonuses are not included. Those are excluded. Pennsylvania, this is an interesting one. Tips are only covered up to only reported up to minimum wage. Beyond that, it's not necessary. I believe is correct. And then
Pennsylvania, a couple other states, but mostly Pennsylvania, they'll count tips up until the minimum wage is reached. So if an employee is paid, say $3.50 an hour, but they get tips, they'll count the tips to bring them up to the minimum wage, which I think is $7.25 or $7.50 right now, and then it's excluded above that. So it's kind of a complex calculation.
It's very complex. That's going to be a fun one to do in that stage.
That's where we reach out to our friend Shannon, who can help with that stuff.
Yes.
So now, stuff that's not included. Top line we just talked about, so that varies, of course. But you also have your, any payments towards group insurance, work uniform allowances. I found was an interesting one to have on there as well. There's also, if I remember correctly, like for certain tools, if they're having to purchase certain tools, that type of stuff does not get included as well. But again, it's really important. This is one you need to check within your own state and with your insurance carrier to make sure you understand exactly what they're using during the audit process. Now, prior to the existence of pay-as-you-go as an option for workers' compensation, everything was basically set up as like a payment plan where you'd start off, maybe you would put down an initial deposit up to 25%, and then you'd have the remaining payments over the next 9 months. The other thing that came along with that is we didn't have portals online to submit our workers' comp audit information. We would have somebody come knock on the door, sit down in the office with us, and they would go through all of your records and basically go through all the different details. That's what I did my very first workers' comp audit, and I tried to become best friends with that auditor year after year after year. Since then, in understanding the importance of it, we started to build out this like collection worksheet where we would capture all the details. And I am using it here to kind of show the information that starts to become necessary for us to be able to really go through the entire audit process, because they're going to be looking for certain company information, owners and officers. Now, that's important because depending on the state you're at and the requirements for workers' comp coverage, many owners and officers can actually choose to be exempt from a policy and not have their wages have a premium attached to it. But again, that depends on the state and your policy itself. Of course, you need from there additional employee details, the names of the people, of course, the gross wages that they're earning. Hourly rates is really important, of course, because in California, that split code that could change it. What's their assigned class code, and really important, we'll talk about this a bit, is job descriptions. Good quality job descriptions are so important during an audit process. So important.
And having a process like this is important too. When you, especially like we're cloud accountants, right? I have clients all over the place and I have to factor in things like Pennsylvania. And I also need to collect this information. It's good to get it now when you start with the onboarding, and then instead of waiting till, oh God, there's the letter from, Pam, it says, I'm coming in 2 weeks, or you have to fill this out in 2 weeks. Get this now, and then you can have the conversation with the client about these things, so you're not under the gun, basically. We did have a question about per diem payments. Do those workers' comp? Do those factor into workers' comp at all from the past slide with the different compensations?
Pam, what is your?
They do, and it depends on the state.
Okay. Sorry, Casey, that's the best I can give you, but we'll give you some information to find out about where your state stuff is too, I'm sure.
Okay. So some of the other information that's required, we've already talked about basically the different employees, their positions, everything else. We talked about the documents you would need. You need one of the ones we said was like the quarterly reporting. And that's because you're going to use those quarterly reports to tie out your payroll. So now, in a perfect world, we would all have our workers' comp policies start January 1st to December 31st, but that doesn't ever happen. Maybe you win a lot when you get. Okay, so Lynda got one of them that way. What usually ends up happening is it's something like January 20th of 2019 through January 20th of 2020. So now you're like, great, I've got my quarterlies, and now you have to add the buffers on both sides, everything else, which is kind of what we do in this little sheet that we use as well. Additionally, and this is where I'd love to dive in a little bit deeper about the subcontractor side of it. One of the things about workers' comp that many people are not quite familiar with is when you are paying subcontractors to do work for you, majority of states, again, this does vary by state a bit, but majority of states require everybody to have workers' comp insurance. There are some that don't, so again, it varies. But that means if a subcontractor, if you're subbing out part of the work, they have to have their own workers' comp policy. If they do not, then your policy will end up covering them unless you provide a certificate of insurance for those people. So we all focus as accountants and bookkeepers on the year-end, the 1099s, but before you're writing that first check out to somebody and we're telling you to get that information, get the certificate of insurance as well. Yes. It's important to check that they're up to date if you have a long-term project also.
Yeah,
Pam, can you help us with that?
Yeah, that's a big thing that we see at the end. And that is one of the big reasons for an audit adjustment that a lot of people don't know about. So when you're hiring a subcontractor to do work, and in a lot of ways, they do the same functions as some of your employees, or even if they don't, if they were injured in the course of doing the job for you, they could file a claim against your workers' comp policy, and most likely it would be paid. However, they weren't part of the initial premium calculation, and so the carrier is going to collect premium for them unless you can show that they have insurance elsewhere. So that's a big one.
And to clarify that real quickly, that what was not just said there is if you didn't know that they did or did not have coverage, they got hurt and filed a claim and they were not already on your policy, that means you as an owner are not protected. You could be open and liable for it. They're not just going to go back and say, we're going to collect on this right now because the person got hurt. So this is where it's really important that you know for sure that you've got that. I believe almost every state actually has a place that you can go and look up whether the insurance provider of a person, what it doesn't tell you specifically is how current their policy is, but it's really important. If this is a long-term project, you should be doing checking that to make sure you've got that coverage, just to protect yourself, of course.
Yeah, that's true. One other point about that too is they'll be classified in the job that they're doing.
Good point.
Oh yeah.
So it could even be a class code that's not on your policy with a, sometimes a high rate. Like if you hire someone to do painting for you, they're going to be classified in the painting class code if they don't have their own insurance.
Very good. I'll have more questions about that when we come back around to it, because that's a very gray area for a lot of stuff. But let's do poll question number 2 real quick while we're at it. Poll question number 2. Surprise, surprise. Are you currently collecting certificates of insurance from subcontractors? It's hard to collect those.
Yep. And I've had to have the conversation with the client where the client is, they can't find the subcontractor, like he disappeared from the planet and they didn't get it when they paid them. And then it becomes the fact that they ended up having to pay the workers' comp for that that subcontractor, because they didn't get the certificate. And
yeah,
it's part of, and then you have the talk and then you start to get a process in place. And some really good subcontractors will just automatically give you their certificate when their policy renews. We've got like 4 questions.
Yeah, let's, while we're waiting for the poll questions to be finished, let's try to tackle some of those real quick.
Okay, so one is from Lisa Thorne. She said, I hope you'll cover explaining, this one's for you, Pam, why we have to report independent contractors. I have such a problem with this principle because the contractors are not supposed to be covered under workers' comp. That's a benefit of employment. I think the way insurance companies charge more premiums is in an unfair manner. All reasons I've heard still don't sit well with me, and it's unreasonable to expect most independent contractors have their own insurance. And which type of independent contractors need to be included? Any clarity will be helpful.
Okay. I can also send some information after the fact. I have some good articles on this, but most of the time they're covered because in a lot of ways they're functioning like an employee. And so in the mind of the insurance company, they're going to cover people that function like an employee.
And I think it also goes back to the idea again that it's a situation that if it's expected that everybody has to have this workers' comp insurance, again, varies by state, disclaimer, um, that's why it's taught that we are supposed to be asking for those certificates of insurance. If you have that certificate of insurance for that subcontractor, then you don't have to pay for them on your premium.
Right.
But the goal is, if that wasn't done that way, and it opens up a big, huge, wide door for fraud if it's not controlled to some extent. And honestly, I mean, I hear what, the statement behind the actual question, and I feel for you there. So it's going to be hard to find any kind of a answer that anybody would want to accept, but these are the facts, right? It's just like the IRS is asking us to do 1099s, same kind of concept. So
isn't the insurance in place to make sure everybody's covered and safe, and I mean, that's the real reason behind workers' comp insurance.
Yeah.
I got another one for you. Would workers' comp apply to virtual subcontractors?
Virtual meaning working off site?
Like a virtual assistant? That's an interesting question. Well,
Yeah.
actually, so let's
Yeah.
think through that, because that's very much this new world in a sense.
Mhm.
Yeah.
Right? If we think about it. So how, kind of a good point real quickly, we can pause for a second and talk about how COVID ties into some of this, if that's okay with you, Pam, that,
Sure.
how's that working currently? For subcontractors like that are, if you're using a subcontractor, if they're doing administrative stuff, would you still need to have them covered? So if like their dog tripped over, they tripped over a dog, right, while they were doing work for you? I know I'm getting extreme.
Yes. I mean, they're still doing work for you. They're just at a location, at a work location, which happens to be their home. And so many people are working from home now. And actually, there are a lot of companies where employees were on site and they were doing a function, and now they're doing that same function from home, or they've changed functions working from home. So workers' comp policies need to be updated with that. So someone may have been doing a job in a warehouse, but now they're working from home, and they can be classified as a clerical employee during this COVID time.
Yeah.
Which, carries a much lower rate because they're now at home, they're working on their computer, they're doing Zoom calls instead of working, in whatever their typical job function was. So that's part of COVID. And then the other part of COVID, I don't know if you want to talk about this right now, but for employees that they're calling it furloughed, although it's not technically furloughed, but they're being paid while they are not working.
Yeah. And that's so, the 0012 class, right, is what you're talking about?
Right, the 0012, there's no premium being collected on those employees. They're not working, but they're also not being covered on workers' comp during that time.
That is a webinar we recently did that I know you can go to Insightful Accountant, and it's in their actual archive, where we specifically covered how some of these changes were being pulled into place. And again, just to kind of recap what you talked about, specific around COVID, is the ability to actually adjust a person's workers' comp class code from maybe whatever type of work they're doing, if they were working from home and only doing administrative. This cannot be a mix or a blend. If it's just administrative, most states are allowing you to transition their code to an 8810. You need to reconfirm, of course, with your policy, which is a lower rate. It's a very, very low rate, so it's very cost effective for a business. I should say, if you have employees that you were paying and they were not working at all, basically they're getting paid to stay at home, that's where the 0012, which has a 0% remuneration rate, but you can still track the wages paid to somebody, which will be necessary for that audit. And that's really important right now. We're going to talk about towards the end when we talk about reporting, how you have to track some of that stuff too. So thank you for bringing that stuff up. This really scary sheet that we're looking at right here. Again, this is part of a template thing that we had created where we have all of the different employees that are set up here, the different class codes basically. And then you have to figure out basically just to show how everything all ties together. If you had all their different regular wages, their overtime, and majority, like for most states, overtime, you're only taking the regular rate. You don't take the overtime portion. So you have to, back that out, which is this POT here. You figure out what the total wages are, you break it out by the different classes, and then they need to tie out to what you actually have against your quarterlies. So in this scenario, we had our 4 quarters, and then we had to do those adjustments I talked about before. So I needed to, if I used my Q1 for 2019, I needed to remove the amount from January 1st to January 19th. And then at the end, I needed to add on the January 1st through January 20th to get the remaining amount. So the way that would play out is it would give us all the amount that, on this example, 262,032.50. When I added all of the wages together and I put that pot back in, total wages matches to the dot. And it's one of the ways that's used to validate that everything's being accounted for, nothing's being missed.
And it's a great, I want to add one thing if you don't mind.
Please,
so
please.
It's great to do these worksheets because I've seen auditors, I just saw one last week, they get a little lazy sometimes. I hate to say that, but they will just use the quarterlies and not do that adjustment. And we send them back all the time saying, please make sure you're adding in the before and after, because it can make a difference, especially now during COVID time, because if they're cutting it off at a certain point and not doing the adjustment, sometimes people now aren't running payroll during that adjustment period.
Now, the sheet that I'm showing here, this is something that I personally created for Parkway. My contact information is in the slides. Reach out. I'm happy to share it, but I just didn't want to just attach it because it took me a long time to build this whole thing out, but I'm happy to share it, of course. So should we dive into some examples of the audits? No, yes. Okay.
I like that. He's like, no.
I'm going to go through some of these pretty quickly because I want to make sure we have some time towards the end. That please keep asking the questions and we'll power through questions at the end. I'll make sure we've got a little extra time for that as well.
There's a lot of questions.
I'm seeing them come in. So we're not forgetting about you. We'll make sure we get to those. So these audits, to give more of a background, these were actual audits that I went through. I've obviously scrubbed the data and made it to where it's nice and clean, but I did screenshots of every single step of the process. And we've added in extra details of what you need and where it's coming from. Because for me, having those kind of like step-by-step tutorials, it just takes away like the fear of it. And it makes it easier for us to train our own employees to start doing these so I don't have to also. This specific one happened to be with employers. And they've got a great online portal. Again, the big difference I want to stress is when you have a company, when you're using these pay-as-you-go systems and they've got a company that has these online portals, some of these actually have like built-in calculators that help you validate the numbers you're providing so you don't have to do an ugly spreadsheet like I was just showing, because it helps kind of go through that process. Others, if they don't, they just have an upload. Well, you want to do that. You're doing it for your own peace of mind because you want to make sure that the first round, the information you send over is as accurate as possible to just minimize the amount of time you spend on these audits.
And to add to that, when you're working with other companies and you have that portal, you have to fill all the information. As you know, you were with me when I got the emergency phone call when it wouldn't click and go through because she had typed the number wrong and it didn't tally out. So that's when the spreadsheet's still good because you could populate it all in the spreadsheet as well. But that's the frustrating part of having to type in all that stuff manually. It's very time consuming. Yeah,
it's also why we started off by trying to cover what is part of wages, because if you don't actually do that part correct, it's not going to tie together also. So, because it's got to go off those quarterlies.
Someone did have a question about mileage. Is mileage included in wages? And I'm sure it's going to be, depends on your state. No.
Pam, I believe that is, right?
Mileage is not included in wages because it's reimbursing an expense.
Okay.
I'm wrong. That's why we brought the expert on. Okay. Yeah. So the things that they're going to be asking here, whether they're going to ask off the bat, of course, were there changes in the business entity? Now, this is really important. We had actually last year quite a few companies that changed from like being a sole proprietor over to an S corp. Entity changes traditionally come with payroll changes and other things. So it's really important. Sometimes it comes with a new EIN, which means you actually need to look. You probably have to set up a whole different workers' comp policy because you would not be covered otherwise. Changes in the business operation. Go for it.
Yeah. Changing the entity could change your officer rules as well. So if you're going from a sole proprietor to an LLC, you may or may not be included or excluded depending on, and you may have to file new forms. So just keep that in mind.
That is a very, very good point. Next one is change in business operations. So if you were previously a tattoo shop, but now you're an art exhibit place that's just hanging art, those are going to have two totally different types of workers' comp, rates, I'm certain, right? So business operations could change it, of course. Verifying the business name, the EIN, goes along with what we were just talking about, making sure that you actually have everything covered under the right company. And then, of course, did the company use subcontractors, cash labor, or other forms of payment not on payroll? They're going to check through that. That's where they start asking for profit and loss as well to validate that as well, is my thought on it. Anything else to add to this part of it?
Nope.
So then the next screen we basically had, as it's going through, it's going to be locations. If you're dealing with a business that has multiple locations, especially multiple states, well, again, since this stuff changes state by state by state, you may have different class codes or different rates or different requirements depending on the state. So they need to know the location of where people are at. Pam, what's the frequency that people are doing multi-state audits, would you say, or policies?
Probably at least 30% or more. A good amount of companies have employees in different states. And this is actually going to become a bigger issue now that so many people are working from home.
Good point.
Because an employee could technically be anywhere.
Mm-hmm.
They could relocate. You just need to make sure that if an employee is now working in a different state, that you add that state to your policy.
If you're close to a state line, right? People could be driving over that state line to go to work.
It happens a lot in the Washington, D.C., Maryland, Virginia. People working from home, they're right there.
So then the next areas that they're going to be looking at is, as we talked about before, it's going to be the officer, you're looking at the wages for non-officer employees. And this is where I wanted to tie it back actually to QuickBooks Online. It happens to be our preference of choice when we're doing with accounting platforms. You can use the workers' comp reporting in QuickBooks Online. If you've assigned a workers' comp class code to a person, you can then utilize those reports to be able to tell the gross wages. Now, of course, if you had that big fancy Excel sheet, you would be tying it out there as well. But this is so much easier to do it this way, to be able to fill in, as we can see here, the top is the actual form, the bottom is inside of QuickBooks Online. You have your different classification codes. This is where the description of what that class code is about and why those job descriptions are so important. It can really change what role somebody's in, or again in California, by the wage amount. So we would see where those would come from, be able to add those in. You can see the breakout, of course, here is with tips, overtime, double time, so forth, because as you're doing that overtime and double time, you're still going to count the regular part of the wage, but not necessarily the overtime or double time additional on top, depending on the state.
One of the questions was about the codes, how do you know what code to use? That was one of the questions from someone.
So it's a very good question. So majority of states actually follow along with the NCCI, what's NCCI?
National something comp insurance.
Exactly. So it's an organization that they have come together and they've created all these different class codes that the majority, I think there's about 6 states that do not abide by them, California being one. There's 2 states that don't actually fully the other ones are monopoly states, where they are provided by the government instead, if I remember correctly. And you can actually go and look them up state by state. You can actually go and look up the different class codes, and you should be, because you need to make sure you understand what the description is. There can be slight variances between different class codes, and it can make all the difference in the world. All the difference.
That's where your agent that's where an insurance agent comes in to help with the classifications, because there are some nuances too. Especially with the clerical class code, there are a lot of rules on who can be classified as a clerical employee, depending on what other classes are on the policy. Sometimes a clerical employee, in order to qualify for that 8810 clerical class code, they have to be in a completely separate walled off location. depending
Yeah,
on the type of business.
that's huge. We have one place, it's an auto restoration place. And if the
Yep.
office person even like puts a pinky toe into the bay, they immediately have to be classed a whole different way, totally different way.
Exactly.
So payroll verification, we talked about this before about why we have to have these numbers, but this is what they're looking for. It's going to be, you know, off of your line 2, the wages, tips, compensation, and where that number would be going into. Certificates of insurance. Again, we touched base on it. At this point, they were again asking about the owners and principals. So owners and principals, we have to list those people down and the amount of money they earned, because we have to tie out to the total wages on those quarterlies. So if we only did the employees, if the owners were exempt is what I'm talking about. And we still have to be able to validate where those numbers are at. But then they also want to know like percentage of ownership to make sure they have all owners considered, the description of the work that they're doing. And then, as I said, it's going to ask, are the wages reported on payroll? Yes or no on there. Subcontractors, this is where you'd be listing it out. You'd be putting the type of work that they do, total payments, and do they carry workers' comp insurance, or you can upload the COIs in a moment.
Can I add something about owners
Please.
while we're talking about it?
You
So
bet.
with owners and officers, some owners and officers, depending on the state, they have to include themselves. Some elect to include themselves because there are good reasons for having an owner on the workers' comp policy. If they are included, there is for each state a minimum and a maximum that's charged. So, you know, even if they make $1 million for the year, each state has a maximum that they'll be charged for workers' comp. And it also has a minimum. So if they're not paying themselves, they still are going to, if they're included, they're still going to be charged the minimum for that state.
And the benefit there is, if you are an owner and you put yourself on a policy, let's say you're a roofing company and you're doing the work and you fall off the roof, well, you can then use workers' comp for yourself. But if you're not covered, if it was an accident, right? If you're not covered, there's no opportunity for that to be even considered. Is that a fair way to say that?
That's fair. And there are some good reasons where and ways that a workers' comp policy is better than health insurance. You're not subject to deductibles, copays. You know, it covers a lot more than your typical health insurance policy, but you're going to pay the premium for it. The other thing is, for any of your clients that are in Florida, they have to make sure that they file an exemption with the state for workers' comp. And if they don't keep that exemption up to date, the auditor is going to catch that when they're checking the state exemption filings. So any Florida, just make sure they stay on top of it. Company owners will get the email, but sometimes they ignore it.
I actually was not familiar with that, so thank you. Lynda, did you know that, Miss Florida? Okay. See, we learn all this stuff as well. So the last step here on this one pretty much is, you've now gone through, you've provided information, but now you have to upload all the documents. And this is where, again, just the goal was to try to be able to show, like, what are you grabbing, where are they from, and what docs do you need? So on this specific screenshot, it's showing at the top, you'd have a payroll summary file. So you would run the payroll summary report from QuickBooks Online, and you would set the date ranges to match the policy. You would select all employees, so that's active and inactive, and then select all work comp class codes. So now you get a full list of all of these that have the different names, everything else, run that report. You can upload that into the system. Pay attention to the type of reports they allow you to upload. Sometimes they are only PDF. Most everything does allow Excel as well. I find most people tend to believe it or not, they still seem to like the Excel more than PDF, because they can do their own calculations and copy and paste into things, but they do take them both ways. Quarterly reports, as we've talked about, as well as your state ones also. So let's do poll question 3. And while we're doing that, Lynda, let's try to tackle some of those questions.
Okay. Let's see. Where do I start?
The beginning.
Yeah, go all the way back to the top. Is there any subcontractor or just those who you outsource your work, if you hire that just does lawn mowing in your business, do you have to have a workers' comp for them?
They usually would have their own workers' comp insurance, I would think.
They're not actually working for you. So they are working for you. They're doing the lawn cutting, but it's a little bit different than working for you on a job.
Well, so I want to
Right.
take that one a little bit further because I've always had kind of a question on this. I'm an accounting firm, but I hire somebody to do my social media marketing, and they're a corporation. Is that actually considered a subcontractor? And do I have to have a certificate of insurance for that? Or is that a service provider? That's just a different business.
If somebody does have their own business and they're truly independent, we can always make a case for not including them. Now it's up to the carrier whether they're going to go with that or not. But you know, if they meet all those tests for being truly independent, they've got their own business. You don't dictate their hours or provide them materials. You know, they work for a lot of other companies and they're completely separate from your business. Like they're your accountant even. We can make a case for not including them in workers' comp. Usually those types of companies would have their own insurance anyway, but if they don't, if they're a sole proprietor on their own, then, you know, we can always try.
That's a good answer. Yes.
Another question too, well, it's an AP Indigo one, is they're new to AP Indigo and we have 3 employees. My prior broker took care of the workers' comp filing. Our payroll was very simple. Do I have to start filing workers' comp with Indigo?
Did they say it's pay as you go?
Didn't.
If
Go for
it's
it.
pay as you go, it's pretty simple. What happens is policy set up, we start getting payroll reporting at every pay period from Intuit. We calculate and collect premium on that actual payroll for that pay period, debit your account, and then move on. Go to the next pay period. What happens at the end of the term with the audit is an audit still takes place. Sometimes it's behind the scenes, and you know, depending on the policy, a client will never even know that an audit took place until they get a statement saying your audit's done, you owe nothing, which is what happens for about 80% of our clients. So when you're doing pay as you go, payroll comes in automatically from Intuit. The carrier will accept our wrap-up report at the end of the term because it's been actual payroll that we've followed all the way through. And they'll take that, close out the audit, and send out a statement. And really, there's no adjustments on those. If so, it's usually pennies. But it depends on the state. Again, I know we're saying this all the time. Every state has a different threshold for when they want a physical or phone audit done, depending on the size of the policy. So sometimes it's state mandated and an actual audit with an auditor on the phone or in person has to take place.
I remember when I first started using AP Go as pay as you go, we actually had a couple clients using it at the very beginning, and none of them had audits. So I was like, woohoo, pay as you go means I don't have to do audits at all. This is awesome.
Yeah.
And then about the next year, one of them got it. I'm like, wait, what's going on here? Like, what do I have to do? It's because the first ones we only had, so out of 6 of them, we had 1 out of 2 years we actually had to do. And that was great. I mean, it saved so much time and just the reporting, everything else. The one thing that happened the next year, and you do have to pay attention to, is if you're having a lot of turnover, it's important that you always go into the portal and just reconfirm that they do actually have the right class code classified for people, because there's not a great way for it to get pulled in. So you just want to validate that as you're adding more employees on, that they have the right class code.
Great point.
Can I hire the people that do it in 0 to 30 minutes?
Yeah, seriously.
They
I'll
must
take
be
this too.
years ago.
But this is like pretty realistic. I mean, when I was doing the manual process, it was very much, it's a 2 to 4 hour process to collect everything and go through it all, at least for me. So this next one, this is a whole different company, and this one was AmTrust. And we'll go through this a little bit faster because it's a lot of the same information again, and that will provide us more time for more questions to power through all those. But it's the same kind of concept. They're going to start off again, asking about the business information, as you can see, the type of entity, business description, any changes as we talked about before, the employee locations. So you're going to see that we've got this trend that's kind of going through all this. The questions it's going to go through. So this one does a lot of yes or no's. It was interesting because on certain ones, it would then pop up other questions. Did people get any tips? Did employees participate in 401k plans? Did they receive any bonuses during the policy period? Did they receive room and board were questions? Did you use contract labor? And that's one where you'd start getting an extra page that would pop up as well. Very, very similar, of course. At that point, your officers, members, partners, sole proprietors, the different types, again, some states are going to allow certain ones to be exempt or not. So you have to list them out. You need to put the percentage of ownership, the duties that they do. And then, of course, the non-officer employee payroll, all of their wages, as we can see here. So it'd be the names, specific duties that they're doing, the comp code that's assigned to it, the state, since it varies, gross wages, as well as any amount that was in overtime, because they're going to take out that pot to be able to match up again. So you can see these tie everything together. And then this is where we were talking about before, that idea of a calculator. So I actually really, really appreciated this portal, because as I was going through the first time, I had to add these adjustments in, but it made it super easy. And you'd put in the description, what it was, Q1, Q2, Q3, 4, add the adjustment, add my notes, and this would not let me submit until the difference was 0. Loved it. It made it so much easier. And I try to explain kind of quickly what it was that we did to get through this, which we talked about before. It's you have to take all the quarterlies, but I had to reduce the gross wages for that beginning portion. Since the policy started on January 20th, I had to remove January 1st, I'm sorry, 24th on this one. I had to remove that initial portion of time, since that wasn't really supposed to be in the quarterly, but then I had to add on the extra at the end as well. Of course, we can't get through one of these without asking for these certificates of insurance. If there is one thing I can ask everybody to take away from this time is the importance of certificates of insurance. It is so, so, so important. You want to make sure you're grabbing this stuff right away. It is one of the biggest ways you will add extra expense at the audit, time of audit, if you don't handle this. And right now, cash flow, super important. So we're going to go through question 4. It's our last one. And this should provide us a good amount of time, because I see we've got a lot of questions, and we can go through all of those to make sure this is helpful to everybody. And last one I wanted to add in is, are you guys currently recommending AP&Go with QuickBooks Online? So anytime we're setting up a new client, we are always, if we're setting up payroll, because we do payroll as well, we always recommend doing AP&Go. It is as an accountant, it is such a time-saving opportunity. More importantly, the rates, I have yet to have a situation where AP&Go is not able to match or beat the rates of another insurance provider. They work with a large number of, I want to say it's tier A, or what's the right terminology to use?
A-rated.
A-rated.
A-rated insurance companies.
And that, they can easily set up and check rates for you. And actually, this is one area we have a little bit of a tip that you can look into. Lynda, do you want to give the secret sauce away?
I don't know what you're talking about.
So there's 2 times during a year that if you're looking at your policy, especially right now with COVID going on, if you are just about, like if you're in the last month or 2 before your policy is going to expire, if they're on a payment type system, that means a business is going to have a down payment ready, right? To be able to get into a new policy year. There is no better time to really look into a pay-as-you-go to keep that cash in the bank. And again, our last webinar, we went through an example of where we showed the cash flow difference of doing a pay-as-you-go versus the other. But here's the other part of it. When you're doing a review, you're going to have to do what's known as a broker of record change. It makes it to where a person can actually, agent can go and try to collect quotes for you, because you get somebody who's assigned to you, unless you open that up, somebody else can't look. If you're going to change the policy, you might be able to time it to actually match to a quarter.
Yeah, that's a secret we've heard.
So there's no guarantee, but we've had people that have asked and they've been able to do it. If you have enough timing to it, boy, how amazing would that be? If you could just tie it straight to a quarter.
It's on your calendar now to ask, right?
Yeah, we can also move policies midterm.
Yes.
During the policy term, if the client's with a carrier that we work with, and we work with all the top A-rated carriers. So there's a good chance that they're with Hartford, Travelers, Guard, AmTrust employers.
And I actually had one with a company that wasn't on the list, but I already have it on my calendar because I know when their policy goes and I'm going to be switching them over because of the time it's involved with my staff having to do all this extra work going outside, having to do the, codes and put it in. It's just a pain. And just switch him over would be great, because he definitely needs it for cash flow, because like Matthew said, it's a contractor and it's a seasonal contractor. So to have the policy run and have them not have to cough up a big chunk of money in March, it's a huge savings for them, because we're up in Rhode Island and they're not even busy yet. They're just bringing their staff back on in like around April. They don't have money in their bank at that point. And it's so much better to have that type of program in place, that they don't have to pay, $5,000 when they don't have it in their checkbook.
Yeah.
Right. And then have an audit 3 months later and potentially owe money.
Exactly.
So like,
Exactly.
and especially for seasonal businesses too, it's great when there's some seasonality to the business. They're going to be paying more workers' comp when they're paying out more employees and they're busier.
Yep,
Well, and again, if pay as you go right now, you've got less people. So if you're not on a pay as you go, you've already set up your payment schedule. So your cash is kind of set. Most insurance, you should check with your insurance provider currently. They may be able to work with you, and they've actually got some deferral of payments that started back in March. So we're getting pretty close to the end of that, but every state varies. But you normally have a consistent payment amount. If it's pay as you go, if people weren't working, you don't pay as much because they weren't getting paid.
It was really eye-opening in the last webinar when you had it all laid out with the math. I'm like, wow, it was a huge difference if that happened when you were going through a time when you're really no pay, no one working.
How are we looking on that poll, Emily? What were our results on that last one? All right.
Ooh,
Good.
Great.
So that's good to know. Thank you so much. Again, I find it very helpful. So the very last bit of this is, how do you do this stuff in QuickBooks Online? And I want to give a bit of a tip for everybody to know, especially again, because of COVID at this time. When you go in and you set up an employee, you have the ability that you can assign a workers' comp class code. Now, it's important to know that this class code, it's not historically static. And what I mean by that is, when you assign it, if you then go in and run reports, it's going to change all of the wages for that person based on whatever class code is set at that time. So if you did have a situation that you had one class code that you were using through most of this, and then during COVID, you were able to switch people over to 0012, you would need, when it comes time to run your reports, you'd run payroll as normal for everything, right? But as you run the reports, you're going to need to run a set of reports. You would want to run, most likely, the normal class code for the entire period of the policy period. But then you would need to also run a secondary report changing the class code to that 0012 or 8810, if that's the appropriate thing, or anytime you have a change of class code, like in California, if there's a change in wage, it goes up and you go to the next class that you'd be in, you'd run the second series of reports so you can use those together, because it won't break it out and save that part. So it's a great workaround. We've got actually an article that's coming out in a video I made that talks about how to do this type of stuff that I'm sure we'll see on Insightful Account pretty quick. But if you've got more questions on it, of course, you can reach out and I can better explain that as well.
Really quick again, what are those two codes you just mentioned? Because that was a question somebody asked. What are those codes again? Real short.
Absolutely. 8810. So 8810 is a traditional administrative type of position class code. Very, very low remuneration rates. If what that's used for is if you had people, I mean, let's say it was a construction company, right? And you're not out doing construction, but you're still paying them to be at home and they're working on online certifications, and that's all they're doing. They're not like, there can't be a blend of work. They can't do part and part. You could set up and have them classified as 8810 as long as your state allows it. And the key thing is you can make the change once. You can't flip-flop back and forth. So it's 8810 for these hours, and then part of the hours it's something else. It's all or nothing on it. And the moment they start to return back to doing any type of regular work, they should absolutely be classified at their true class, not this lower one. The secondary one was 0012. And again, most all states have actually adopted this, but you should reconfirm. This is very specifically for any time that you have wages being paid and people are not working. So you're literally just paying them they're not doing anything work related. This gives you a way to still track those wages, but to not incur additional premium dollars on something from that nature. Is that am I saying it okay, Pam?
Yeah, you are.
So-
I have something you said something you said got me thinking about class codes too. And a fun fact about class codes is that you can't normally split what an employee does into different class codes. So if they do part-time clerical, but then part-time they're, you know, in the auto body shop, they're rated at the highest rated class code of the two. All of their wages are. There are some class codes, especially with contractors, where you can split their duties. So if they're doing painting one day, they're doing electrical another day, you can split those, but it requires really, really good record keeping and hours spent in each actual class to be able to do that. But normally you go with highest rated class code.
That's like T-sheets.
Yeah.
Yeah, T-sheets.
Most people can't provide that level of detail.
It's tough. It's really tough.
Yeah.
We've tried figuring that out and how to track the stuff. The best we've ever come up with is using T-sheets and adding special tracking codes there, because you could then use that to break out the different parts of time. But you need to be able to prove it with time cards, everything else as to what they were doing with signatures to validate that they were actually like, this is what they're doing. Because everybody out there is always going to be like, this is a lower rate. They're doing this 85% of the time. Just be careful of the gray area. So, so let's dive into questions, of course. What do you want? What's next? What do you got for us?
Let's see. Now that everyone's working from home, how do you know if the accident is workers' comp related or not? Cameras, no.
It's a great
There's
question.
a story about this, right? About the person who tripped over a dog and tried to sue, I believe. But good question. How do they do that, Pam?
If it's during work hours, and normally when someone's working, they're going to go with somebody who got injured on the job.
Okay.
Does it require a business, should the business have notified their insurance company that they now have people working from home since it's a change? And is there anything that needs to be like notarized, documented, whatever of that nature?
So if somebody's working from home and they're in a different state than what's on the policy, then yes, the carrier needs to be notified. And it's the state where the employee is working, not where the business is based. So actual job location, which would be if somebody working from home, that's their actual job location is home. And if their job function is different, like, you know, we talked about the employees that were doing something else. Now they're at home working just on, you know, on their computer. You could let your insurance company know, and maybe they can endorse the policy if that class code's not in the policy right now. But other than that, you know, those are the two situations where you would need to let your insurance carrier know.
Because of time-wise, Lynda, if it's okay, I'm going to try to go through some of these questions and fire off. And Pam, if you can correct me if I fire off a wrong answer. Okay.
Okay.
So one of the ones here is, does independent contractor only have to be included if they work in your office as opposed to their own office? I would say that is a no. They need to be covered under both circumstances if they're doing work for the business. Would you agree?
Yes.
Okay. Our quarterly PR reports never tie out to the wages due to pre-tax deductions. Are there other schedules that should be provided to support the pre-tax deductions so that all information ties out? This is an area that used to drive me nuts when I was doing my worksheet and trying to truly understand what is part of the actual wage, calculating wages. This is where it's helpful to use the quarterlies, because you can look at the quarterly amount. And then if you take, what I learned to do is I take that quarterly amount. For California, you have a DE9C where it breaks it out by employee as well. And I would evaluate what the total was that was reported there, and then look back at the payroll and then figure out what's being included, what's not, so I could reverse engineer it myself. There wasn't a different schedule, but it was the way I could figure out the difference when it came to company to company to company. So I hope that kind of helps. Also, what about sole proprietors? Who does the work but is not required to have workers' comp on themselves? Do they have to have workers' comp to do an outsourced job? It's a good question. It varies by state. There are certain states that do not require businesses to actually have workers' comp until they have 1, 1.5, 2, 3, 4 employees. Yes, there's actually one that's 1.5. So it varies by each one, but the suggestion would be if they do actually have it, everybody's protected. But Pam, what if you know, on the flip side. So if I'm hiring somebody that like doesn't have it, then they should have a certificate of insurance, or it could be added to the other company's bill, right?
Right. So there are some situations where it's a sole proprietor. They can get an owner only policy, it's called, where they can just cover themselves. It's a minimal type of premium.
Forgot about that. That's great. Thank you.
But then they've got that certificate.
One of the questions that was there that was interesting was about somebody asked, if you hire subcontractors, is it okay to deduct the piece of workers' comp from their before you pay them? So you actually take it out of their wage when you give them their payment. You take a piece out to cover the workers' comp that you're going to have to pay because they don't have insurance.
I don't think there's anything legally against that.
I know.
I'm going to defer that. I mean, it's an interesting idea. I would check with your own insurance provider to see if they have any clause against that, or if your state has any requirements against
it's a legal
that.
thing.
Yes. We've got many more questions, but we're right at the time here. What we can do though is we will get these questions back and try to get back to people as well. So I'm sorry if we didn't get to your question yet, but let me share contact information so you can reach out. Pam, what is the best way to reach out to you?
Send me an email.
Beautiful. And we've got it right on here. You can even click on it and it'll work perfect for you. And Lynda, how about you?
Probably the best way is just go to my website. I have a contact form, but also you can go to Facebook if you want to join our group.
Yeah, actually, it's a great area. For myself, I would say our Facebook group, QB Community Live, is the best place. If you need to email me, please, you can, but please don't. I actually prefer a phone call. Call me old school. I think we can get through a lot more questions on a phone call than we can in an email that just goes back and forth. But Facebook is also a great place to reach out to us. You can ask questions, and not only will Lynn and I do our best to answer for you, there are countless other accountants and bookkeepers who will do their best to help you also. And on that note, again, wishing to be very respectful to everybody's time. Thank you very much for taking the time to be with us today. We will reach out with more answers to additional questions. And as always, any last words of advice? Nope.
No. Thank you.
Everybody loves audits now.
Yay. On that note, here's wishing everybody a very, very successful week. Thank you so much, guys.
Bye.
Thank you for being here. Everybody, I will get the webinar recording and the presentation to you by the end of the day today. So again, thank you, Matthew, Lynda, and Pam for being here with us today. And I hope to see everybody at the next Insightful Accountants webinar. Have a good day.
Bye, guys.
Bye.